is All About Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. Let's have a live look at Bitcoin right now. The CoinDesk Bitcoin price XVX index is at $41,726, shooting up about 2.3% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
The difficulty of mining a Bitcoin block dropped 35 basis points on Thursday, the second time this month after a consistent climb since November. On March 3rd, mining difficulty dropped 1.5% according to Glassnode data. The difficulty adjusts automatically relative to the computing power on the network, also known as the hash rate, to keep the time between each mined block relatively stable at 10 minutes. The Bitcoin mining hash rate has dropped from an all-time high in February of 248 exahash per second to 216 on March of 17th, also per Glassnode data. Compass Mining telling CoinDesk that the slight drop in hash rate is likely due to unprofitable miners unplugging ASICs as energy prices increase globally, further predicting that more ASICs will fall off the network. Electricity prices are soaring across the world as one of the world's largest exporters of fossil fuels, namely Russia, wages a war with Ukraine, and global energy supply chains are tangled by sanctions. Oslo-based Harkin research further telling CoinDesk that Kazakh miners will likely go offline due to electricity shortages and a government crackdown on illegal mining. Right, joining us now to discuss is our Week in Review panel, CoinDesk Managing Editor of Technology, Christie Harkin in Toronto, and markets analyst Damanick Dantes in New York. Hello, Damanick and Christie.
Hi there, Christine. Happy Friday.
Happy Friday to you. All right. So, Christie, kick things off for us. The Russia-Ukraine war is having an impact on the hash rate, it turns out. And then Kazakhstan is also entering the situation. What can you tell us?
Well, it's all kind of, I think, interrelated. I think there, obviously, as you mentioned, the energy crunch is hitting everything and everybody. And if miners decide to turn off their machines because the price of energy is too high, then that's going to affect the hash rate. But we're seeing more of an impact on that global hash rate drop really coming from Kazakhstan. And what has happened there is the government has gone after what they're calling illegal mining operations. So we're looking at mining operations that are operating in areas that they're not supposed to be, or perhaps they have been not reporting their taxes and, just doing some underhanded things. And so the government swooped in and said, no more mining for you. And as I believe it was someone at Arcane Research said that the amount that it's dropped it really is mostly related to Kazakhstan. The 1.3% drop is pretty well correlated to the drop in hash rate coming from Kazakhstan. Keeping in mind, of course, that many miners outside of Kazakhstan, which is very fossil fuel dependent, many miners outside of Kazakhstan, say in North America and parts of Europe, are really more focused on renewables. So any energy source that is sourced from renewables is not going to have quite as big an impact on the mining operations there, because they're not trying to buy oil and gas fuel mining operations. So it's probably a little less important to them.
It's interesting that it's having this concentrated effect in Kazakhstan, and that's impacting the hash rate. But what about the rest of the world? Because in terms of, global energy price hikes, that affects everyone.
Yeah, but it doesn't affect, it does affect everyone, clearly. But when you're looking at grids that are being balanced across entire jurisdictions, and you're looking at grids that often are actually more focused on hydroelectric and renewables, they're not going to be in quite as big a crunch as those that are relying on fossil fuels.
All right. I also just saw from our CoinDesk article, on March 15th, Kazakh authorities said they seized almost $200 million worth of equipment from crypto mining operations as they cracked down on illicit mines. Legally operating miners in Kazakhstan had their power cut off at the end of January as the government struggles to keep up with energy shortages there. Let's take a look at the markets. And Damanick, kick us off. I'd say we've been experiencing a lot of volatility in crypto, in Bitcoin, followed by long pauses. So, and then volumes. What can you tell us about that?
Yeah, it's kind of like start, stop, start, stop. That's been the theme so far this week. And this chart just shows the past volume spikes over the year. Obviously in the end of January, we had the huge risk off move. And that was, when Bitcoin was moving in lockstep with equities. And that just, started the year off with a bang there. And then we kind of settled out a bit. We kind of phased out. And typically when you get those large volume spikes on down moves, that signals capitulation from the seller. So it gives you a brief pause. And then obviously when Putin announced the military operations in Ukraine, that caused a bit of a sell-off and the volume spike there. And, these tend to be very short-term buying opportunities. And then we saw that again during the Fed rate hike, but the Fed rate hike was like 5% swing up and 5% swing down. So we kind of ended up net, flat. And then now we're kind of seeing that 37K support level being held very well. And then, we're holding up above the 40K level now. So we're seeing some renewed buying interest. But I also look at the volume of buy orders versus sell orders in the futures market. And that gives you a basic level of conviction. And they're pretty much balanced over the past 24 hours. So right now we're kind of still skating on thin ice.
We're stuck in a trading range.
Yeah, until we see a decisive breakout, probably this weekend, above the 40K, the 41K level. There's some resistance around 43 to 45, so that could kind of stall things a bit. And then, of course, if we break below 37K, that just shows that the selling pressure, remains pretty strong. So we need to see some large volume moves to confirm any shift in direction right now.
In the meantime, the big announcement this week was from the Federal Reserve. They're raising interest rates by 0.25%. The Bank of England announcing they're raising rates by 0.75%. Taiwan also raising rates. So what impact is that having on the markets and Bitcoin specifically?
It was pretty much priced in, right? So with the U.S. is kind of lagging behind. Typically, the U.S. leads the rest of the world in terms of monetary policy. But, here we've been a little bit balanced, kind of wait and see. So we definitely saw that coming out. The Bank of England was pretty much expected to. Taiwan was a surprise, but one of our interns, Angelique, said, Damanick, Taiwan pretty much follows whatever the U.S. policy does. And that was pretty much consistent. And we saw that there. And China, was a big surprise there, too, because, they saw the volatility pick up. Those are extreme drawdowns in Chinese tech stocks, and that was crazy. But then the government, says that they don't want to see volatility. So it's a measure of keeping the markets pretty much in line with their agenda. And that led to a large rebound in Hong Kong shares, and that pretty much helped crypto as well. If you look at the volume during Asia hours, pretty strong. That's where we're seeing the big spikes and the big fades happening. So there's some activity going on there. And then also the COVID-19 situation is picking up in China. And, the government sees that it's very costly to keep those lockdowns intact. So the risk of a shutdown total is pretty much limited now, which could be pretty good for economic, keeping the economy afloat over the short term.
All right, excellent. Let's head over to next week and taking a look at Wasabi Wallet. So, Christie, the crypto world is pretty divided in how they're responding to the Russia-Ukraine war. Many are surprised that privacy-focused Wasabi Wallet is moving ahead to prevent their CoinJoin coordinator from allowing certain Bitcoin transactions. Tell us a bit about this story.
Well, yeah, and I think that the whole Russian war and the concern over people avoiding sanctions and laundering money has really put the spotlight on certain Bitcoin privacy features like coin joining. And in a sort of preemptive move, Wasabi Wallet had, well, at least the coordinator, the ZK Snacks coordinator, the company that actually runs Wasabi, they run a coordinator that helps people who are using Wasabi to coin join their transactions. I believe it's by default. So what happens is with a coin join is you have UTXOs, unspent transactions, that go into a big pool, if you like, of other like-minded people who want to mix their coins. And then, so that all these transactions enter this pool, and then everybody at the other end gets whatever amount they put in, they get out on the other side. But the thing is that the root of the transactions is obfuscated. So it's hard for you to track, once it's out on the other side, where those transactions actually came from. Now, when you're dealing with coin joining, what happens is you have to find people who also want to coin join with you. And Wasabi has what's called a coordinator. And there are lots of coordinators out there, and anyone can spin up a coordinator. This is all open source stuff. You can do this. You don't have to rely on a centralized coordinator. But it does make things easier, as many centralized products do. So this centralized coordinator can see what addresses those transactions are coming from. And those sometimes are blacklisted addresses, and they can tell if a blacklisted address is trying to mix. So they have effectively blocked those blacklisted wallets from transacting with their pool. Now, that doesn't mean they can see what goes on in the pool. It doesn't mean they can trace things once they come out the other side, but they can see what's going into the pool. And that's where the coordinator has some degree of control. Now, this has been a big issue for people who are saying, why are they doing that? They're not compelled by a government agency to do this yet. But what the devs are saying is that they're doing it in order to protect the coordinator from getting shut down altogether, and saying it's still open to everybody else who wants to coin join. The transaction pool is still pretty big and people can still use it, but in a sort of unprecedented somewhat move, they are censoring the actual UTXOs that can go into the pool. So that has caused some consternation. And it's also caused a lot of FUD, people thinking, coin joins are broken, and, Wasabi can see what you're doing. No, Wasabi can't see what you're doing once it's in the pool. And no, coin joins are not broken. This is something that happens on a protocol level for Bitcoin in general. It's just Wasabi has a centralized way of doing it to help their particular set of users. So you can go somewhere else if you really, really want to. Anyway, that's it. It's what I'm looking forward to, is seeing where it goes next week. Are people going to stick with the Wasabi? Are they going to go to are there going to be other coordinators that get spun up? That kind of thing.
Are there a lot of workarounds, Christie, around this? Like, if you're a blacklisted wallet, can you just send your transactions to another wallet and then send it to a CoinJoin? And you could use other coordinators.
Not really. Yeah,
really?
No, they're still traceable. They're still it depends on there are things you can do. It's really tricky. You have to know what you're doing. The thing with Wasabi is it's got a really good transaction set. The bigger the pool, the easier it is to create really good privacy. More mixing is available. So you have to find another non-blacklisted big transaction set to push your funds through. But again, it's all kind of tricky. It's all tricky. So
Christie folks wrote a whole article on the Wasabi wallet and what's happening on CoinDesk.com. So be sure to check that out. Also, Damanick, let's take a look at the markets for next week. So taking a look at Bitcoin, we've got a chart on the 100-day moving average. Tell us, where do you see Bitcoin's trading range?
Yeah, so that's a trading range there between about 37K, which is where we held over the past month or so. And then the top of that range is around 45, 46. If you can see the 46 level, which is a 30% or 38% retracement of that prior down move. So that pretty much gives us those key support resistance levels. You saw that the recent rebounds have been limited or stalled around that area. So we're looking for a decisive move above that to indicate a trend shift from that 4-month-long downtrend, which has been pretty significant. And that downtrend is confirmed with the downward sloping 100 moving average. That just shows that the average price move has been lower over that over the past like year or so. So that's pretty significant. So I'm just watching that. It's very neutral for now, but we're seeing momentum pick up a little bit, especially on the weekly chart. If we get the confirmation of that, particularly over this next weekend, that can give us some green light. So we're just waiting to see what happens there.
And what about Bitcoin dominance?
That's interesting too. So that's been picking up a little bit over the past year, but then over the past week, we saw altcoins jump up, especially Ether. So that's kind of caused that Bitcoin dominance to fade, and that of course is the market cap of Bitcoin versus the total market cap of crypto. Typically, when you see that ratio rise, it's kind of a risk-off thing, and Bitcoin declines less in a down market. And then when that ratio declines, it just shows that it's risk-on. Altcoins are gaining more flavor. And that's kind of what we're seeing now over the past few days as we stabilize. So I'm watching that ratio very closely. You can see it's been stabilizing over the past few months or a year or so. So if you see that pickup like we saw in 2018, that can indicate that there's a lack of conviction on the upside. If that ratio continues to decline, that's good. It gives us some buying time, and it could clear the selling pressure that we've been seeing as of late.
All right. Thank you very much, Damanick. And also, I want to correct a little mistake I made last week. I said that this week was mining week. It is not this week. It is next week, and it is happening for real. Christie, just a quick preview. What do we have to look forward to?
Oh, we've got so many stories coming. It's amazing. What I'm really looking forward to is there's a huge photo essay that will come out on Monday. We've got stories about mining in Belarus, mining in the US. We've got a story about cryptojacking, and not just Bitcoin. We also have stories about, Ethereum mining, proof of stake mining, all those differences. Anything you've ever wanted to know about mining in crypto is going to be featured next week on CoinDesk.com. So go to Mining Week, check it out. There's going to be a Spaces event happening on Twitter. And definitely follow along, because there's going to be a lot of really good information.
Awesome. We'll also have a couple of guests joining us to talk about Mining Week on First Mover, as well as all about Bitcoin. All right, folks. Thank you, Christie. Thank you, Damanick. Have yourselves a wonderful weekend. All right. That was our
weekend.
See you guys.
See you later. That was our CoinDesk Weekend Review panel with Managing Editor of Technology, Christie Harkin, and Markets Analyst, Damanick Dantes. That's it for All About Bitcoin. I'm your host, Christine Lee. And we'll do it all over again on Monday at 3 o'clock. Also join me Monday morning at 9 a.m. for First Mover, your first look at the day's global crypto news headlines. You're watching CoinDesk TV.